What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD where we had these three potential setups. We're going to analyse each one and why this particular one gave us the best RR and the characteristics that led to this pretty epic trade. Unfortunately I missed all three of these. Very frustrating because I missed the first one, got myself worked up. Decided to call it quits because I don't like revenge trading, so I didn't take advantage of any of these. However, if I'd have persisted, then the setups were there to offer some pretty epic profits. Let's jump into the high time frame analysis now and see what led to these three setups. So here we are on our 15-minute time frame to start the analysis. As always, we're going to be using the session liquidity tracker to show us untapped levels of liquidity, which are these green lines extended across the screen. When a level of liquidity is taken, the lines turn red. So as we can see, we have just swept Asia low before the London session starts. We've got the New York PM session low just below us, and then obviously stacked liquidity above us into an older new week opening gap, which is these highlighted areas here. If you're interested in using the indicators that I use, then the links are all in the description below, so you can obviously set your charts up to look similar to this. Let's continue with the analysis. So we can see that we have pumped up through the New York AM session yesterday. We've left this 15-minute fair value gap here. We haven't taken out Friday's low yet, so Friday's low is still intact. We have a larger 15-minute fair value gap down here, which was respected all day yesterday. This is just at the bottom of this week's new week opening gap. So we're now pulling up away from the new week opening gap, which means potentially the older new week opening gap could be a draw on liquidity. We have created relative equal highs here between the New York AM and PM session, and Asia has tried to get to those highs and failed as well. So we're building liquidity up at the top here. So what would make sense would be a run on liquidity lower to then potentially drive higher, drawing towards this new week opening gap, which ICT has mentioned is always quite a strong draw on liquidity. We have left bearish fair value gaps as we are dropping down, taking out these lows. So these are just something to be aware of as we're entering the London session. So if we're in long positions, we just need to be aware that these may be sticking points and create a reversal in price action. We're going to take our fib from the low of yesterday up to the high, just so we understand where the premium and discounts are. So premium is anything above the 0.5 fib, so this is the 50% equilibrium of yesterday's range. So really we want to be looking for sells in a premium, buys in a discount. Optimal trade entry is the 618. So the 618, this is a sensitive area. When price does come down there, we can often find a retracement. We can also see at the 618, so price has pulled up, created a new low in the in the New York PM session, and then cleared straight through this high. So this is a breaker block. This is the last up closed candle that created the new swing low yesterday. So we do have this area, this 15-minute bullish candle, exactly over optimal trade entry as a 15-minute breaker block. So we'll drop down onto the 5-minute chart now and start monitoring price action to see how we progress. Ideally, a pullback into a discount, aiming to run these equal highs would be nice with an expected draw up to the new week opening gap. Let's see how we get on. Drop to the 5-minute. So our London session when we start monitoring for trades is from 1 AM. So this is the open of a new 4-hour candle. And as the new candle opens, we can expect some injection of volume. So we're into the London session now. You can see we've hit the 15-minute fair value gap and had a bit of a rejection on the 5-minute. So eyes are on the Asia low, which has just been swept. Sorry, not the Asia low, the New York PM session low, which has just been swept there. we also have this larger breaker block as well. As we've swept liquidity, I'm going to drop to the 1 minute to monitor price action and look for a potential reversal. So this, for a 2022 model entry, is our break of structure here. So our last swing high, which is this candle here, created the new low after a sweep of liquidity. We are pulling back, leaving a fair value gap at this point. So this is going to be our break of structure. We've obviously got a bearish fair value gap here, which could potentially hold price down, but we are leaving a bullish fair value gap here. So we want to see a close above this break of structure to give us a possible long entry. Let's see what we get. The time as well, just as extra confidence, is 1:30. So we've got a new half-hour candle opening just now, which I like to obviously operate around 15-minute cycles. So every 15 minutes, I'm looking at where price is and if we're going to expect an injection of volume. So this is 1:30, so this is quite good confluence. So price has come higher. We've obviously got a break of structure. We are leaving bullish fair value gaps. We've closed through this bearish fair value gap. That could be potentially be an inversion fair value gap. We've closed through there. In fact, where these two are overlapping, so between this candle and this candle, could be a balanced price range. So this is an inefficiency between a bearish fair value gap followed by a bullish fair value gap. Where the two overlap is a balanced price range. We do have a balanced price range higher up in the range. So from this bullish fair value gap to this bearish fair value gap is a balanced price range, and that's just underneath that 15-minute fair value gap that we rejected from earlier. So again, something just to keep an eye on. So we've had a break of structure. We've left a fair value gap as well, so we're displacing back up. So we've had an aggressive move down, an aggressive move back up. Not massively aggressive back up, but we are leaving displacement, which means a potential entry for 2022 model would be off this fair value gap here. Highlight the fair value gap so we can keep an eye on it. And then the long position would be from this point here. So the mistake I made this morning, at this point, we'll see price rises up, does come back down again. It's kind of hovering around the BPR. And then we're into 42, 3, 4, and then 15-minute candle opening here. So this is absolutely textbook what I'm looking to see. So we're at 44 minutes past. We've got a pin hammer. We're respecting 50% of this fair value gap. This is just absolute textbook. However, I didn't enter. So the mistake I made was I was looking at Dixie. Overcomplicating things, I never look at Dixie. I removed this from my strategy because I found I was overcomplicating things, missing out trades or taking trades in error. So we can see at 145, Dixie had created relative equal highs here with the New York PM session. So I didn't want to take a long position on Euro because I expected Dixie to run this high. So if Dixie goes higher, that means the dollar is going higher, so the euro should go lower. So this is where I overcomplicated it. Instead of just focusing on the one pair and taking action at this point, I was looking and I thought, well, I don't want to take a long on euro until the Dixie has swept this high. As you can see, current price action, the Dixie never swept this high. It just continued lower. So this is over-analysis from my part. The entry should have been at this point here. So that is the perfect trigger candle, that pin hammer there, coming into a new 15-minute candle. 50% of this bearish fair, 50% of this fair value gap has been respected. Your target would be to sweep out this high or potentially this high up here, depending on how aggressive you are. So we're just kind of consolidating at the moment. We're still respecting this 1 minute fair value gap, so we've not closed through it yet. We've not had an injection of volume like we were hoping. So we've got in at 45. We're now coming up to 2 AM. We've had 15 minutes of consolidation. Price now 58, 59. So again, the new hour's coming in, and now we're getting the injection of volume. So we've had to sit through 15 minutes worth of back and forth. The new 15-minute candle opens, and we are getting some volume coming in. Bullish fair value gap. So we've swept liquidity at the low. We're expecting the high to get taken. Ultimately, this would be take profit 1 for me, taking out this swing high. We have got a balanced price range there, but I'm expecting this to get taken. We've got buy side liquidity. So I'm expecting this as a take profit 1, which is a 4.9R. However, in the grand scheme of things, as I mentioned earlier, we would be looking to hold up to that new week opening gap. So we could be even holding up to the Asia high here through these 15-minute fair value gaps if you wanted to hold that. I mean, we're at 20R, so potentially unrealistic at this point. But at minimum, I'm expecting this buy side to get taken, which it does nicely. It taps it there, so I would be out at that point. So that would be TP1, and that was a really nice 5R trade. Very frustrated that my over-analysis, what do they call it? Analysis paralysis. So my over-analysis led me to not taking this trade when it was absolute textbook. 15-minute pin hammer into a fair value gap after a break of structure. After sweeping liquidity, it hit all of the points for me, and I didn't take it because I overcomplicated by looking at Dixie. And so at this point, I gave up on the session. I didn't want to take any more trades because I was frustrated. And if we continue through price action, we can see we have several other options. What I'll highlight, sorry, one extra thing that I've just realized I've not highlighted. This is a breaker block here. Just realized I've not put that into the analysis. So we've got the unicorn entry, essentially. Price cleared through. I was talking about failed PD arrays. Price cleared through this, which should have been an order block to hold price lower. We cleared straight through it. The breaker block then acts as support for price to go higher. Should have been resistance. When it fails, it flips to support. We had a fair value gap inside a breaker block, which is the unicorn entry. So again, this is just set and forget textbook. So that was there, ready to take action on. So we'll continue now with the second possible entry. So price is aggressively coming down. We are coming into a 230 candle. It's gone into the 15-minute fair value gap. So I was just watching price action at this point, thinking I'd missed the move. Price comes back aggressively. So we've built this liquidity here now. So in my mind, I'm thinking that this low is the low for the day. We've built this liquidity here. So we've got this buy side, sell side liquidity underneath us. Price comes aggressively down into this liquidity. And then I'm monitoring now these bearish fair value gaps, looking for an inversion fair value gap. We come down, we put in a new high. We take out this liquidity. So we've taken this out. We've not taken this low. So we've created relative equal lows at this point. So we've got sell side below us. We've got relative equal lows here because we've not swept it. This fair value gap is what I'm looking at. So price comes up. Closes through that inversion fair value gap. So this was the entry that I was thinking. I could have taken a second entry based on this inversion fair value gap. Price has come down aggressively. It's failed to take that low. It's taken this liquidity here, left this intact, and is now pulling away. This bearish fair value gap should have held price down. It hasn't. Price has closed through. It's closed through at 259. So we've got a failed PD array, the start of a new hourly candle. So I was considering a long from this point here. Didn't take it because I was very frustrated and thought that I maybe not seeing price right. We got equal lows below us. I've not really tested this theory in any great depth. We've got a failed PD array there, targeting the high. Start of a new hourly candle. Obviously we've come down aggressively, so we can retrace this nice and aggressively as well. So the new hour opens up, comes into the inverted fair value gap, holds it perfectly. So we're watching this inversion fair value gap. 50% of it has been respected at the start of the 3 AM candle, and then price rockets away. Within 1 minute, sweeps the high. So again, I didn't take this. I was extremely frustrated at this point. Missed a textbook unicorn entry earlier on. This was a new strategy that I'm just considering. Didn't take the entry, and within 1 minute it was 3R. Fluke, I'm not saying that that's going to happen every single time, but the basis for this trade was that we had failed to take the low. We'd taken some internal liquidity here. We'd come up, this inversion, this fair value gap had failed, gone into an inversion fair value gap, respected at the start of the new hour, and then price just rocketed up, clearing out all of the liquidity at this point. So there is another 3R. So now I'm really frustrated, as you could probably tell. Price action continues. So we are retracing this aggressive move. I'm not sure what caused this massive wick. There's no red news on the cards today, so I'm not sure why we got this massive aggressive move at 301. It may have just been a stop hunt to take out these guys. Price retraces this. So you see an aggressive move like that, often you can see price retrace it. It's similar to red news. Price comes back down. So we've got relative equal lows here now that we've built. We'll clear this inversion fair value gap. Building liquidity again, another attempt at the low. We've not taken it, so we've just got another relative equal lows here and here. You've had a bullish fair value gap here, which has now failed. Got an inversion fair value gap. At this point, expect price to come and run these lows. And it does. So we've ran these lows. Time-wise, 3:16. So the next 15-minute candle is opened. We've got this bearish fair value gap at this point. So price comes in. So we've just started the new 15-minute candle. We have this pin hammer again. So a lovely rejection candle. After sweeping liquidity on the relative equal lows, we have this fair value gap that we're monitoring. So if this fails, it's a potential entry to go long. We close straight through it aggressively. So this now flips to an inversion fair value gap. So similar setup to what we had before here. Break of structure is not while this point here. So this is the last swing low, the last swing high that creates the new swing low after sweeping this liquidity. Inversion fair value gap here. In fact, if we look at this on the next candle, I believe, we'll create this to a balanced price range. So we have inefficiency, bearish inefficiency, followed by a bullish inefficiency where the two overlap. We have a balanced price range at this point. So very sensitive area. The fair value gap has failed. You would take an entry, tap of the high, stop loss just below the low. So again, this is very aggressive entry. So this isn't the 2022 model. This entry and this entry are a new model I am working on, which is based on failed PD arrays, which would be the breaker blocks and inverted fair value gaps and balanced price ranges. So we'd be looking for a tap of the balanced price range, give ourselves a point or so above that. Ultimately expecting at least this break of structure to get taken. We're aiming for the other side of the range. So we are in, so we get tagged just in. Balanced price range is tagged by a point or so. And then price is rejecting. We have our break of structure now with a fair value gap. So your first take profit, in my opinion, would be up here. So we've got relative equal highs at this point. So you'd be expecting these to get swept and then potentially holding, as I mentioned. We've taken the New York PM session low. The New York PM session high is all the way up here. So price aggressively moves up. So this is 2.3R in like 4 or 5 minutes. TP1 hit, take majority of the trade off, 70% or so. Leave the stop loss where it is, so I don't bother going to break even. And then you would be running this, expecting the other side of the range to get tapped. 7R would be to take out the Asia high, and 8R basically to take out the New York PM session high. We can see that the 15-minute fair value gap is holding us down a little bit. This potentially could be an inversion fair value gap now. So hold price higher if we can clear through that. So we clear through the 15-minute fair value gap up to the next 15-minute fair value gap. Clear straight through that. So this could potentially flip now to support. So again, this 15-minute fair value gap could be an inversion fair value gap. Respected, price comes away again into the next 15-minute fair value gap. Again, do we flip this to support? So a bit of a rejection to start with. Price clears through it. So again, this 15-minute fair value gap now could turn into support. We are aiming for the Asia high, potentially the New York PM session high. We're respecting this 15 at the moment, clearing back through. Dragging on, I mean, we are already 6.7R in profit. Would like to see this liquidity taken though. We are up to lifetime at the moment. So this is where we're at. Expecting price to attack these highs. We've cleared through these 15-minute fair value gaps, so hopefully you would potentially be taking profits at this point. I expect to run on this liquidity, and the main draw on liquidity to be this older new week opening gap. So I hope that was useful. 3 pretty epic trades. We can see that this one is the best one, and I want to explain why I believe this is the best. We engineered liquidity here during the session. We then had this aggressive move down, and then you can see the displacement candle buyback. Look at the size of that candle. So displacement should be the #1 thing that we're looking at when we're considering entering a trade. Do we have engulfing displacement candles? We have a really long wick rejection candle and then a huge engulfing candle at this point. So there was no real displacement on this trade. So this one is potentially a risky entry. Yes, we had the failed inversion fair value gap to take an entry on, but there was no displacement there. And we created equal lows. So yeah, it got 3R out of that one. Potentially risky. That could have been just a fluke. I was monitoring it and regretted not taking it. That's maybe a one-off. No displacement. This one, I would say that there was displacement on this trade here. You can see that we had several pretty large consecutive bullish candles. That's displacement over a break of structure. So we do have displacement here as it pulls back and then coming up. The reason this one worked best, though, in my opinion, is just one big displacement candle. You can see as soon as they enter the market, closing over previous bearish fair value gaps. It's a good signal to take the long. So I hope that analysis was useful. It was a really frustrating session for me. This is a video that I'm going to go back and re-watch and remind myself why I don't over-analyze trades. If you enjoyed the content, please leave the video a thumbs up. If you've got any comments or questions, leave them down below. I will do my best to get back to you and help out where possible. And if you are enjoying the content, then please consider subscribing. The channel's growing really, really well at the moment. It's fantastic to have so many people on board finding value in the daily analysis that I'm providing. And yeah, I really appreciate the support. So thanks for watching, and I'll see you again in the next video.